Welcome to We Know Finance. This is a channel devoted to helping you understand your finances better so that you could save better, live better, and be more financially empowered. Now, this channel is a channel that's near and dear to my heart. I've just recently started this channel because I believe a lot of people would do better if they knew better. And the Bible says, my people are destroyed for lack of knowledge. Unfortunately, a lot of people did not get the training that they needed in school. They were not taught the things that are actually helpful to them in school. So they need to kind of learn on the fly. And as a person who's been on that boat, I totally concede. So I will help in whatever ways I can lend my expertise, but I'll also enlist the help of other professionals who are experts on various subject matters. In this particular video, we're going to be discussing a clear value tax video. This video got 1.4 million views, and it's been very effective. I've read some of the reviews on it. The question we are tackling today is how to invest in the stock market. So it's literally for beginners. How do you know what stocks to pick, what stocks to stay away from, especially now that we're in a very volatile market where this war has now affected a lot of the prices and the market's going up and down. How do you not become unnerved and find an investment strategy that makes sense for you and your family so that you can preserve and protect your wealth? That being said, we're going to jump right into the video where this is explained and laid out for beginners so that you can have a better understanding of this particular subject matter.
In today's video, I'm going to teach you how to invest in stocks. So today's video is a stock market for beginners video, and I'm going to explain to you what are stocks, how to invest in stocks, how people get wealthy by investing in the stock market, and what stocks are best for beginners. So let's get started. I want you to know that the stock market is very simple. So let me explain to you what stocks really are. So let's just say that you own a business, and so you're a business owner. And let's say that you want to raise a lot of money for your business to grow and expand. So what do you need to do? You need to find investors. And a great place to find investors is in the stock market. Now, in order for you to raise a lot of money for your company, you need to sell a portion of your ownership in your company to investors. And that's what stocks are. Stocks are just units of ownership in a company. So if you buy stock in Apple or Microsoft or Tesla, you are an owner of the company. So you probably own a very small piece of the company, but you are still technically an owner. Therefore, one person does not own Apple or Microsoft or Tesla. So there are thousands of people that own stock in those companies. So those companies have thousands of owners, which are the stockholders. Now, let me tell you how to invest in stocks. So the stock market is a big marketplace where you go to buy and sell stocks. To participate in the stock market, you need an online brokerage account. So there are a lot of online brokerage accounts to choose from. I'm going to leave a link down below to some online brokerage accounts that are offering sign-up bonuses with zero fees, and there's no catch. It will cost you nothing. And some of these sign-up bonuses, they can be substantial, so please be sure to check them out. So you open up an account, and then you transfer money from your bank account to your brokerage account, and then you're going to have money in your brokerage account, and then you're going to be ready to buy stocks.
SoFi's helping me get my money right to achieve my ambitions, like saving for a better swing.
So you want to buy stocks in good companies. That's because if a company does well, then the value of the company increases. If the value of the company increases, then the price of your stock goes up. And in many cases, if a company is making a lot of profits, the company will take those profits and pay a dividend to whoever owns the stock. So you don't have to do anything to collect the dividend. It just gets deposited into your accounts, which is pretty awesome. So this is passive income in its truest form. Now, if you want to sell your stocks, it's very easy. So you may want to sell your stocks for whatever reason, such as you just want to cash out. Maybe you don't like the company anymore. Maybe you want to sell your stock to have money to buy a different stock. So you're free to do as you please. And again, this is all free, no fees, zero commissions. So when you sell your stocks, you'll have money in your brokerage accounts because, again, you sold your stocks. And whenever you want, you can transfer that money back to your bank accounts. Or you can let that money just sit there. Some brokerage accounts, they'll pay you interest on the money sitting in your accounts. Or you can use that money to buy stocks, whatever you want. Now, I want you to know that many people get wealthy in the stock markets, and there's not just one way to do it. I'm going to tell you what most people do. And you can try to see which style is most appealing to you. Buy and hold, dividend investor, speculator, trader, and let me explain these styles to you. Buy and hold. Some people just buy stocks and they just hold on to them for a very long time. We're talking about years, even decades. Some people, they'll even hold on to their stocks until they die and they'll put it in their will. So this is a set it and forget it approach. Traders. Some people in the stock market will try to buy and sell frequently and make some money. So these people are known as traders. Traders are not interested in holding a stock for the long run and watching the company grow. So I would recommend that beginners in the stock market, so if you're a beginner, please refrain from trading with a large amount of money. I would recommend that you get some practice in first. But it's true, many professionals get rich by trading, but that comes with experience. Speculators. Some people buy smaller, riskier stocks that have a lot of potential and could skyrocket in price. So these are speculators. I'm not saying that in a good way or a bad way. People speculated on Tesla early on and made a lot of money. So you could say the same thing for Amazon or Walmart and so many other stocks. But there's other people that speculated on stocks and lost a lot of money. So if you're going to speculate, don't invest too heavily in one stock and do not fall in love with a stock. Your emotions can cloud your judgment. Dividend investors. Some people buy stocks primarily for the dividends. Many investors take their dividends and reinvest them to get more dividends, and your wealth accumulates over time. So this is a great way to build your passive income. So you can actually set your accounts to reinvest your dividends automatically. It's called a DRIP, Dividend Reinvestment Program. I am personally a big fan of dividend investing because you literally get paid for doing nothing. So if you're dividend investing, your money is making you money. So you should know from the get-go which style is most appealing to you. And it could be more than one. It could be a combination, but there's no one right answer. There's no one right method. So whichever path you take, you should understand the pros and cons of that method or that style. Now, let me tell you what stocks I think are best for beginners. There will be so many stocks to choose from. Small companies, big companies, companies in different sectors, energy, technology, real estate, retail, banking, pharmaceuticals, etc. There will be companies that focus their sales in the US. There will be multinational companies. There's just so many options. I would suggest that as a stock market beginner, you invest in bigger and more stable companies. The reason why I'm saying this is because of risk and reward. If you invest in a smaller, no-name company, there's a higher probability that you can lose a lot of money. As a beginner, you should get a feel for the stock market, take it easy, and just learn. Once you get more experience and knowledge, then you can slowly move out of your comfort zone into stocks that offer more risk and reward. If you don't want to take this advice and you want to jump straight into risky stocks, then I beg you, please do so with a smaller amount of money. Please take my advice. The stock market is not a get-rich-quick scheme. In the stock market, you want to be an investor. You do not want to be a gambler. And I want to see you make money. As a beginner, it is better for you to make a little bit of money than to lose money. So I would recommend sticking with safer stocks to start and learning little by little. Slow and steady wins the race, and it's a marathon. And just so you know, if you want to be very safe and diversify, then you can always buy index funds. An index fund is a collection of stocks. It's like a big basket of stocks where you get diversification. So it's a way for you to buy a little of almost everything, which decreases your risk. And I want to say this because this is so important. When you're looking for stocks to buy, always do your own research. I would recommend that you take the approach as if you're buying a real business. Investigate the business, what do they do? How do they make money? Who are their competitors? How do they compare to their competitors? Why do you believe this company has a bright future? Will there be any disruptive circumstances in their industry? Does their stock price seem overvalued, undervalued, fairly valued? So please do your due diligence. So listen, I hope this has been helpful. If you want to see what I'm buying and you want exclusive educational content on the stock market, then I encourage you to please check out our Patreon website. I'm going to leave a link down below. Thank you for all the support. I appreciate it so much. I wish you a very nice day.
Okay. This gentleman did a great job of explaining the basics of the stock market. For someone who's looking to invest and diversify their money, it is a great place to actually do so. But what he did emphasize is the importance of doing your own research and making sure that when you're investing in the stock market, that you have some knowledge about what it is you're investing in, because it's very easy to gamble, to take a lot of money, maybe some of your savings, and to put it into a stock. But you have to understand what the ramifications of that are. There are some stock strategies that's a bit more risky. You can talk about options and forward contracts and things of that nature. But this is sort of the high level of, how you can potentially use the stock market to diversify your income flow. This is a way that you can potentially create passive income flows for yourself based on how effective you are at investing in the market. Now, he talked about a little bit about index funds and why are those important. Index funds, he touched a little bit about it, but think of it this way. Let's just say under the umbrella of technology, you have Google, you have Facebook, you have TikTok, you have Instagram, you have Yahoo, you have all these various social media companies. All those companies trade on a similar index under maybe technology companies. So instead of buying one of the 5 or 6 companies that I've just listed, you're essentially buying the overall index, which includes all of those companies in them. So what happens is if one of the 5 or 6 companies that I listed goes up and it wasn't the one you pick, and let's just say 4 of the other ones go down, then it's likely that if you pick the one that went up, you made a good deal. But when you don't know which of those companies is going to increase, you can buy the index to say, well, look, technology companies or AI companies could be another example, seem to be raising a lot of money. There's a lot of buzz around them. So rather than buying one AI company like Sam Altman's ChatGPT, or Claude or one of those things, I'm going to buy the whole index. That includes Claude, that includes ChatGPT, that includes Google's AI company. And if 3 out of the 5 do well and I own the index, that means the overall average of the index is a better return than I would have gotten had I just invested in one. So it's less risky for me to pick the right one because I just essentially invested in the index, that I benefit off of the performance of all of them within the index. So that's why he said it's a safer bet, because you're essentially buying what you would call an ETF, exchange traded fund. It's kind of an index fund that essentially whatever stocks are within this exchange, you benefit off of that. So it's a safer bet. Now, why would that strategy make sense? If you are a buy and hold person who's buying the stock and going to sit on it for a little while, you're not needing to use the money, you don't need to day trade to make a profit, an index fund would make a lot of sense for you, because you're betting on the performance of the index over time. And if you're just looking to add passive income towards your portfolio, that makes a lot of sense for you. If you're a day trader, it may not make the most sense for you to buy an index fund, because you may have a whole index get smacked. So I'll give you a perfect example. Let's just say, given the war, you wanted to invest in a shipping company, a freight shipping company that has to travel through the Strait of Hormuz. Okay, as you know, the Strait of Hormuz right now is shut down. So that shipping company is not traveling through the Strait of Hormuz. So likely the stock is going to have a negative effect because it's not transporting any goods through that Strait of Hormuz due to the war and the blockade and the tolls and all that stuff that's happening right now. So that particular company is going to affect you, right? It's going to affect your index. So now if you purchase an index of shipping companies who have to travel goods, who have to have goods travel through the Strait of Hormuz, an area that's been shut down, that whole index is going to be affected negatively. So if you bought an ETF for those type of companies, none of them are going through that strait. So that means you're going to see a loss. But if you bought an individual stock, let's say you bought a stock for a particular country that is going through, like a Chinese shipping country. Iran has made some exemptions for Chinese companies to be able to ship some oil through. That particular company may be the only ones making money because of the restrictions. So if you picked right, based on the research that you did, you can make a lot of money over a person who's doing the index. So if I'm a day trader who takes more risks, that would be more appealing for me because I can make more money on that type of thing. But that means I have to be a bit more informed. I have to study. I have to know the mechanics of what's going on in the market to know to pick the right stock. Now, if I'm not someone who pays attention to this on a day-to-day basis, and I do have a buy and hold approach to investing, then that wouldn't necessarily be the right strategy for me. So in that case, ETF may make the most sense, but maybe not in that particular industry. Maybe I need to diversify the industry. Like a great industry to potentially look into during wartime would be the defense companies, the Raytheons, the Boeings. Those are the companies who's getting the government contracts to make ammunition, to make war fighter weapons. Those particular exchanges of war-like companies, defense companies, are going to make a lot of money during wartime. So a person like myself, during this time, I would invest into defense exchange index. That would make the most sense because it doesn't matter if you're Raytheon or Boeing, they're getting a lot of business right now from the government. Trump just went and announced that he needed $500 billion to continue to fight this war with Iran. The $500 billion is going to be allocated to these defense contractors, these defense companies who make ammunition, who makes equipment for them to fight in the war. That's guaranteed money that's going to increase the value of those companies, those stocks. So that would make sense as an exchange traded fund in this particular time, which is wartime. But this is the type of thing that you start to look into. This was a preliminary explanation of the stock market for those who may not have much of an understanding. I think the gentleman did a great job explaining the basics, but I just delved in and gave some additional information that might be useful to you. Well, I am Mr. B. I thank you very much for joining me for this discussion. I definitely ask that you like and subscribe, stay connected to the channel, as we have a lot more useful information that you can use to potentially help yourself make money and potentially protect your money in the future. So thank you for joining me. Stay connected, weigh in. If there's any questions, feel free to use the comments section to leave your questions, and I'll respond accordingly. Thank you, guys. Have a blessed day.